logging into our weekly webinar. It is just past 12 o'clock. It's Friday, the 19th of June. The noonday gun has just gone off here in Cape Town. So welcome to Real Estate Investor Talk, episode 6. It's our weekly webinar brought to you by REMAG in conjunction with Let's Talk Property. My name is Neil Peterson, and I'm the founder and editor-in-chief of the Real Estate Investor Mag and the REMAG digital platform, and we welcome you all. So at REMAG, we're the essential source for real estate investors, buyers, and property practitioners, and we are fiercely independent, and we update you with the latest news, information, education, property tools, and connect you to the best thought leaders, real estate players, and investors to keep you at the forefront of your real estate game so that you that are here today can succeed. So we cover everything on residential, commercial, offshore investments, whether it is good or bad news. We give you the insights, the principles, and lessons for real estate investors, for buyers, property practitioners in South Africa, and globally as well. And today is going to be offshore. So we host these thought leadership webinars every Friday. It's at 12 o'clock. So we encourage you to join us every Friday just to increase your investment knowledge, or to invest, or to find out where's the best place to go to invest, or to connect with different people. And the best person to invest in first is yourself. So you've come to the right place. So today we're still in lockdown, day 85 at alert level 3, and the real estate sector is mostly open for business. It seems like we're almost there. We still have our restrictions, rules, and limitations. And so we welcome to you, the audience. I think there's a little bit of feedback over there. If I could ask some of my panelists probably just to drop your, just to put on mute for now before I do the introductions. Okay, thank you. All right, so welcome to you, the audience. Firstly, I want to welcome you and look forward to your participation, because this is for you at the end of the day, and to our audience for the best audio and visual quality. Please switch off all other streaming videos or anything else that slows down your internet. And if you do log off for any reason, you can re-enter the webinar with the same link. Just use the same link. And on the bottom right of your screen, there's a Q&A icon for any questions you would like to pose to the panelists. So please identify the panelist's name and your question, and we will deal with them in the last section of the webinar. There is also a chat box on the left-hand side for any general queries, comments, technical issues, or any important links or even contact details that need to be shared. And there will also be a poll, and that will come up onto your screen with multiple choice questions, which will pop up on your screen periodically, and we will ask you to vote during the webinar. So please participate in that as well. If you want to see replays of this webinar and any other webinars that are available for you, and you can either, if you come late onto the show, or those here to log out early on this webinar, you can still view it and these other replays in our series, which is posted onto the reimag.co.za platform. Just go to shows drop down and you'll find the REI Talk link. And this webinar will be posted there after the show in case you do have to leave early, whatever it may be. So just a little bit of background. We give you both the good news and bad news, as I said, about world economies, your investments, and the property world. But we also give you leading trends with some expert insights so that you can learn and apply in your business, in your life, your property businesses, and your investments. And we've seen the economic impact of the COVID-19 pandemic. It's really been felt across the globe. And as South Africa and the rest of the world slowly emerges from lockdown and begins their new normal, the need to buy, sell, and rent real estate is making a comeback. And we have the specialists here today to talk about how property markets are going to get reignited across the globe. So today, our topic is how to take the offshore real estate investment plunge. And we have got an awesome panel with you, and they will introduce themselves shortly. And we know that investing in offshore property allows multiple benefits to the real estate investor, including diversifying your wealth portfolio into a safe haven destination, hedging yourself against the volatile rand, access and options for residency and citizenships, and also opportunity to create a passive income in a stable currency, or even a plan B, amongst many other benefits that we'll hear from our panelists today. It can be quite a daunting prospect for many, especially if you don't have a proper strategy and you don't have the right knowledge or the best expert advisors and partners as we have here today, or even proper research on the various options, where and how to invest, how to leverage funding, how to understand exchange rates, tax benefits, how to move your money offshore. So we look at multiple popular destinations for the South African investor and the advantages of offshore investment in these countries. So our panelists will share insights into investing into the United Kingdom, Portugal, United States, Cyprus, Mauritius, Switzerland. And those markets, by the way, are mostly tried and tested destinations already for a number of South African investors. So without further ado, I would like to introduce our panelists. Well, in fact, I would like our panelists to introduce themselves. Starting off with you, John. If you could just put on your microphone, John. I know you're muted. If you could just put the mic on. Thank you, John.
Thanks, Neil. And great to be on your show. My name is Johnny Robbie. I'm the chairman of the Robbie Property Group, and also together with Signatura, which is my private label brand, and more recently, New World, which is our offshore arm. I've been in property since 1978. We've developed nationally around South Africa through the main centers in all types of development, mixed-use development, golf course estates, and of course the broader spectrum. We're also the developers and owners of Century City, which has been our flagship since 2003. And more recently, our foray into the international market with our new joint venture called New World with GMG Properties, a Geneva-based property group, and very active in Lisbon in Portugal, which is where we chose amongst the many countries that we investigated that we felt comfortable, and that was very similar to South Africa. So I look forward to the questions and inform you and maybe help our future buyers that are out there. And I'd like to hand back to you, Neil.
Wonderful, wonderful. Thank you. Justin, over to you, please.
Great, thanks. Good afternoon, I guess it is now.
Yes, it is.
On the call today. My name is Justin Clark. I think best known to most of you through founding private property 20 odd years ago. But I think what many don't know is that I was involved in real estate development across multiple sectors before that, on a much smaller scale than John and some of my colleagues, but certainly 25 odd years ago, it was pretty big. So who am I representing today? I'm the Chief Operations Officer of Orbest. What we do is we help people to invest in the USA. As you can see from my screen, my backdrop, I don't have a wonderful picture of the Alps or a break in Mauritius or Portugal for that matter. But what we do offer is we offer returns, solid US dollar-based returns, and we invest in a very tight niche, which is medical commercial office buildings. And that is basically what I'm going to talk a little bit about today. And I think, the general consensus on the call today will be, you need to make sure that you have a large proportion of your money invested offshore. And I think I look forward to that conversation.
Wonderful. Thank you. Welcome, Justin. And also welcome to you, Sean.
Yes, thanks very much, Neil. So quick introduction for me. First, my name is Sean Thompson. First and foremost, I am a property investor myself. In fact, I've just about exceed £1 million worth of property bought during lockdown in the UK. Secondly, I've got a huge passion for helping other people. So in terms of what we don't do, we don't do passports. We don't sort of advocate the purchase of new build property. But what we do is we educate people and we introduce them to vetted third-party service providers. So a bit about my journey. Year 2000, went to London, got stuck in a dead-end job, worked for a company called the Daily Mail. Neil, as a journalist, you might have heard of the Daily Mail before.
Yeah,
worked from them I was with them for about 3 or 4 years. Wasn't passionate about what I was doing, and came across a book probably many of you guys have read called Rich Dad Poor Dad at the end of 2003. And that really got me interested in investing. It got me into some seminars, got me education, gave me tools in order to get started investing in the UK market. Now, two things really got me excited about the UK. First thing is the ability to recycle money. So buy distressed property, add value, and then refinance. So I could use other people's money to invest. And the other thing was interest-only funding, so the ability to create cash flow from day one. And 18 months after I started my training, I was able to leave that full-time job and go into property full-time. I've been very fortunate to train people all around the world for Robert Kiyosaki and a few other big hitters in the educational environment. Trained in Australia, trained in Europe, as well as here in South Africa. Trained more than 7,000 people on UK property investment. I came back to South Africa end of 2016 together with my best friend Peter Martinez, and we started a company called Wealth Trek. What we do with the Wealth Trek is we give you the education to be able to assess deals, understand the UK market. We get you set up with a vehicle to start investing through, the company bank accounts. We introduce you to the right people in the market to get you started. Everything that you can do effectively here from South Africa, and get you into a position where you are you have your own UK property business within a 6 to 12 month period buying UK property. So that's what we do. Thank you, Neil.
Wonderful. Thank you, Sean. Great introduction. I was also very fortunate to interview Robert Kiyosaki around about 5 or 6 times, and his wife as well twice. Very, very interesting and very good principles of investing. Richard, welcome to you.
Yes, thanks, Neil. My name is Richard Haller I'm a director at Pam Golding Properties in Mauritius. I've been heavily involved in the our Mauritian operation for the past 7 years or so under the Pam Golding International banner. We've sold over about 6 billion Rand worth of property over the last few years, mainly to South Africans, French, and maybe 10% to the rest of the world. The importance in terms of Mauritius and real estate is the ability for clients to get permanent residency if they spend $500,000 in property. And that's obviously been an important part in terms of South African investors and other nationalities in terms of securing residency. It is one of the simplest forms of residency programs around, in terms of you purchase the property and you get permanent residency, and there's no other conditions around that. So it bodes quite well with a lot of investors in terms of the ease of actually getting the residency. Also, Mauritius as a country has proven itself in terms of its economic ability, its ability to attract high net worth individuals, and also a sound and strong government, which has also proved itself over the last 3 months. During COVID, we're officially COVID free, so we're out and about. For the moment, still with masks, but restaurants are open and we're sort of semi back to normal, which is great. I was based in Cape Town up until about 4 years ago, where I moved to Mauritius full time to head up the operation here. The background behind me, I'm not on the beach. That's just an aerial shot of Grand Bay. That's where I stay, and that's where some of the best beaches in Mauritius are. So thanks,
Wonderful.
Neil.
Thank you, Richard. I don't know what, it must be something in the air, being on, living on an island, because all the islands seem to be, it doesn't seem to be affected by COVID. So if you look at New Zealand as a country, for example, they seem to be through it as well. So I don't know, must be something in the air there, Richard.
Must be.
Welcome. Pascal, welcome to you.
Hi, Neil. Can you hear me?
Yes, yes.
Thanks for having me on the show. So my name is Pascal Stratus, and I've got a background in property from a local context here in South Africa. I've been exposed to various different developments and properties through the last 10 years. Recently, I've been introduced to a gentleman by the name of George Ioannou, who's the CEO of Carnegie Properties. This is situated in Cyprus. Earlier this year, I flew out to Cyprus to see the different developments that Quarantina Homes is involved with, and very, very taken back by the whole development and what's going on in the Cyprus market. I think just to touch on it, it's one of the islands that is also less affected by the COVID. They've come out of it, and trading back to normal. They've got flights coming in. Things are looking up for these islands. I think one of the buying points is from a Cypriot point. If you do buy property in there, there's opportunity to get your golden visas or permanent residencies, as well as citizenships. And I think that's one of the perks that come with it.
Wonderful. Thanks, Pascal. Nice to have you. As I said, must be something in the air on those islands that you guys are, not affected by COVID. Tony, welcome to you.
Hi there, guys. Thanks, Neil, and to the panelists. Tony Inley from Realtor of Excellence. Realtor of Excellence, first cloud-based estate agency in South Africa, track record since 1977. Got a strong team of 80 agents in Cape Town and office in Switzerland, where we're super excited to be hosting developments in South Africa and Cape Town and helping clients diversify portfolios. Our goal is all about adding value to our clients and helping them diversify portfolios in property. Thanks, Neil.
Wonderful. Thank you, Tony. Nice to have you. Graham, welcome to you.
Hi, Neil. Thanks a lot. Thanks for having me. So I'm Graham Barrett, one of the directors at Currencies Direct in South Africa. And we're a global payment specialist, basically, private banking for foreign exchange, essentially. So, once you've decided which island or mountain or city to buy your house in abroad or diversify your portfolio, we can obviously get your money there for you and make it go a little further. So we've been around since 1996, and we're able to leverage off our global flows to get better rates for our clients and hold their hand through the process, through the red tape, get the applications processed and all that sort of stuff. So yeah,
wonderful.
We'll transfer the money for you.
Great stuff. Well, we like to hear a little bit later how we could do that, and what are the limitations, advantages, etc. And especially in terms of where exchange rates are going. I'm sure you've got an opinion of that as well. Great. Thank you.
Just tap onto the crystal ball quickly, no problem.
Absolutely. Okay, so guys, we're getting into Q&A, and I'm going to start off with John. John, now, most of your activity has been in South Africa. I mean, you've left an indelible mark on the South African property development landscape, particularly here in Cape Town. And I mean, now you've founded your third major property development company, New World. Now, European domiciled, recently established, to do developments outside of South Africa. Why have you selected Portugal, first of all, and why offshore? Do you want to maybe just elaborate a bit on that, John?
Well, I mean, we've been looking offshore for many, many years, and it's very difficult to find what we were doing in South Africa offshore. And I came across Portugal, was introduced to it by Newman Leash from GMG 2 years ago. And it answered a lot of the questions which to put my mind at ease. In fact, Cape Town and Lisbon are not too dissimilar in many ways. But why Portugal? Firstly, one of the most globalized and peaceful countries in the world. Great, it's got great weather all the year round. It's a stunning country. It's the vast majority of the population speak English, which was very, very important to us. And it's probably one of the most affordable destinations in Europe to visit. And it's known for its warmth and its hospitality. So that was one of the major key factors. The other factor was when we look at property, we don't look at it from a golden visa perspective. We look at it on the merits of where we believe that we would like to develop. In other words, it must answer all the developmental questions. And the particular entree into Lisbon in an area called Amaraish answered all those questions. A fantastic site. We could do similar projects to what we've done in Cape Town and around South Africa. And we got very excited about Portugal. Most importantly, for our buyers, interest rates, you can borrow today at 1% for 30-year loans, 30-year mortgages. So the affordability is great, and it's not expensive. And I could almost call, according to my guys in Lisbon, very similar to what it costs in South Africa. your living costs are similar in Portugal. So all in all, we are over the moon about being in Lisbon. We've got a lot of projects lined up, and we've got a full order book, and we're very excited to share it with our South African buyers, of whom in our first project of the 90 million euros, of the 150 units, we have sold 115 at the moment, of which 90 came from South Africa.
Wow, that's incredible. John, what is the effect, and I'm going to actually ask all the panel, what is the effect of COVID-19 had on the Portuguese market? Can you maybe just share, in particular pertaining to yourself?
Yeah, it's a very good question. Portugal has come out of COVID in a remarkable way. Portugal's a small country, it's got 10, 11 million people, and its recovery out of COVID and post-COVID has been remarkable. And that's why you already see hospitality open, the airports are open, and they're getting back to normal very, very quickly. And in a recent study by PwC, Portugal have, of the 4 countries in the world, Portugal and the 3 others, Hong Kong and in Berlin and Monaco, are the ones where they expect positive growth for the post-COVID for the first year. So we are seeing people out there. It's very different to what we see back home here in South Africa. So again, the Portuguese government have done a remarkable job and well on its way to go into the post-COVID world.
Wonderful, that's encouraging. Justin, now you have a more specialized method of investing offshore, and I mean, you particularly in the US. Now, do you want to share how it is slightly different from other standard real estate investments? And then I think coupled with that, I'm going to ask you that COVID question as well. I mean, has it an effect on your rental incomes and distribution?
Yeah, thanks, Neil. I guess the first thing is that us as South Africans generally, when we want to invest offshore, we like bricks and mortar because it's something that we're very comfortable with. So kind of the first step would be to go over to the UK and buy an apartment and put your money there. And I think all of us know people who have done that. And I think most of those people will accept that those investments, apart from devaluation of the rand, and maybe if they invested a little while ago, some appreciation of the property. But generally, you can't live off the returns that you get from the investment. The return on investment is generally pretty poor. When you pull up a contractor, there's hassle and the cost of engaging with that. I think that when I was looking at investing offshore, I was looking at real estate because I understand it. And I was looking at perhaps getting into the commercial real estate space where there are better returns. Of course, if you're going into any first world market and you want to buy some real blue chip real estate, you can't do it on your own. And I think that that's where I met up with a bunch of people, specifically a guy by the name of Henny Bezednoot, who's probably South Africa's biggest private owner of medical real estate. And I was very quickly convinced that medical real estate, specifically in the USA, because the USA and South Africa are so similar in the way that medical services are provided. We both have a big private healthcare sector. That medical in the USA in the future would be worth much more than medical buildings would be worth today. In other words, it's a massive growth industry. The US demographic is getting older, and that demographic has got money. So it made absolute sense to get into the medical space. And what Henny and a bunch of the guys that were involved before I got involved had already done is they started to acquire these buildings and effectively get other investors to come in, and initially sort of friends and family, small crowd, and so it developed. So what we do is we acquire the building, we actually list it as a separate listed company, and we allow investors to come and invest in that company. So ultimately, the investors own the building, but they own only one building. And by the mere fact that many investors can come together to buy that building, we can buy these beautiful blue chip medical office buildings in these key destinations. So that's the first thing. Your second question was about COVID. And I think when you are talking about commercial buildings in this current world, you need to be very cautious. commercial real estate sector has been smashed. If any of you invested in REITs, you'll understand that. I think that the beauty of medical is we're an essential service. So in the US, although we did have 21 by number, 10% could not pay their rent, they will all catch up by the end of the year. So the net effect for the year will be 0. And the actual effect was 95.3% we collected in April of our normal median rentals, and then 93% in May, and then back up to 97% in June. So basically, we can say that COVID had no real effect on our incomes. What does that mean for investors? Well, it's fantastic because they continue to get this 8% cash on cash return, which we pay out quarterly. So that's like 2% a quarter. And that's literally, we collect the rent, we split it up, and we pay it out to the investors. And then ultimately, the model works, Neil, and just to be clear, you get your dividends through the period. That's 8% cash on cash, roughly, depending on the performance of the medical building. At the end of the period, we sell the building. It's a 5-year lock-in. We sell the building, we take the capital growth in the building, we split it up, and we share it out with investors. That pushes the IRR up to about 11 to 17%, depending on how well the building performs.
Right. Okay, that's in US dollars, of course, right?
Of course.
Absolutely. Great. Thank you, Justin. Sean, now you are helping investors move into the UK market, a very popular market for investors. And I mean, how do South Africans find deals from a distance? I mean, is it easy as jumping onto the Rightmove website? I mean, we know it's the top UK property portal comparable to Property 24 to access investments, or how would you go about that?
Yeah, so that's a very good question, Neil. I mean, you know, me being in Plettenberg Bay, I've been living here for what, 3.5 years now, and being able to buy a property is really down to the people that I've got on the ground within the UK. So one thing we advocate and we introduce investors to is compliant sourcing agents. So effectively, a sourcing agent is the opposite of what an estate agent is. So they don't work for the seller of the property, they work for the investor. And they effectively are on the ground doing the viewings, doing the marketing, doing all the legwork for you. So making it passive from that perspective and finding you below market value deals that you can add value to. And for us, that is a big part of the model we teach. You know, I started my investment career by buying distressed property, adding value, refinancing, and that asset was producing cash flow from day one. So that was really the model that I focused on. And that is effectively what the sourcing agents within the UK go out and find for our investors. A couple of tips here for you know, for our participants in the webinar today to find good sourcing agents. They have to be compliant. I mentioned that word. So like an estate agent who receives a fee, you know, a commission for selling a property, a sourcing agent now is regulated within the UK market. So they need to have professional indemnity insurance in place. They need to be registered with the property redress scheme, as well as registered for anti-money laundering supervision. You need to find out which property ombudsman scheme they are a member of, and find out whether they are registered for data protection supervision. So just some ideas there for guys that are looking to invest in the UK and using sourcing agents. You've obviously got to find the right people to work with, which is, you know, through my contacts, having been investing in the UK now for the last 16 years, and the network that I've got there, you know, the educated network, if you like, we've plugged into the right type of compliance sourcing agents to find the right types of deals, strategy dependent on what the investor is looking for.
Right, excellent. No, thanks, Sean. That's a nice intro. Pascal, moving on to you. What are the investor benefits of investing into Cyprus? I mean, why is it such a good investment destination for South Africans in particular? I mean, besides beautiful island life, you know?
Okay, well, first and foremost, I think it's important to understand that Cyprus is part of the EU. Having said this, I believe that the investment into Cyprus should almost be looked at in 2 ways. It gives you a certain lifestyle. Cyprus is one of the safest countries in the world. It's ranked 5th worldwide in terms of safety. I think that resonates quite highly with South Africans. The weather is great. I mean, you've got 9 months of the year, which is absolute bliss, as you can see behind me. You drive basically on the same side of the road as South Africa. It's an Commonwealth country. So there's a lot of similarities in that. Everyone speaks English. There are a large number of South Africans which are residing in Cyprus. I think the cost of living is also relatively low. It's one of those European countries where you can get by there at a good rate. The schools and universities are excellent. A lot of them are working with UK institutions as well as American institutions. And I think just overall, South Africans can feel at home in Cyprus. So from a lifestyle point, it does tick a lot of those boxes. From an investment point of view, I think maybe from the numbers side, I think that's where people also always are looking at. I think the corporate tax in Cyprus is one of the lowest in Europe. It's sitting at 12.5%. There's zero property tax, which is always a benefit. The VAT is as low as 5% on, there's a zero tax on dividends. And the business law works off of the English law system, which ties back to the Commonwealth system. There's no tax on inheritance, which is maybe something at the moment that's a little bit contentious here in South Africa. Your capital growth, you'll find, is very consistent there and has been for the past few years, and it provides a good return on investment. I believe overall it's a great vehicle to hedge your South African rand.
All right, excellent. Thanks, Pascal. Tony, you in the Alps, you're in the Swiss Alps. Eh? Tell us about Switzerland. I mean, that's one country. I don't know why invest in Switzerland. I think that's the first thing.
So, being in property for the last 25 years, family business in Cape Town, being Swiss, I lived in Zurich for 2 years in the restaurant industry. So knowing Switzerland really, really well. For me, it's close to my heart as well, and got people on the ground and the culture and everything else. But Switzerland, firstly, one of the lowest unemployment ratios in the world, one of the strongest currencies. The world is in interesting times at the moment with what's happening in Europe. So the Swiss franc has been a very, very good hedge on other currencies. From a South African point of view, it's helping clients who own a lot of property in South Africa to diversify their portfolio, lower taxes, having a Swiss bank account, having someone on the ground. With technology these days, Andermatt is one of the biggest ski resort developments, and it's not just about skiing. It's an all year round destination, lower taxes. It's only as a foreigner owning property, residential property in Switzerland. It's the only project in Switzerland where a foreigner can own property, residential property in Switzerland. Low taxes, also interest rates at 1%, getting loan to value at around 65% mortgage, and it's limited stock. So Andermatt Swiss Alps, it's separate title. You can put it in any entity, no death duties, no transfer costs. So, and there's an amazing team to manage our clients' portfolio. So you're in first world, Swiss bank, low taxes, good opportunity, and also amazing lifestyle. So I think in today's times, I think people are realizing instead of just working and putting money aside to retire one day is actually need to live life. And I think COVID is actually showing us that instead of just having assets, diversifying portfolio, live a little bit more. I mean, going to Mauritius, to going to Portugal, going to the UK and Cyprus and Switzerland is about, if you're going to earn and retire one day and then only live life, then you need to live life now and actually enjoy life.
You know, Tony, it was just before, in fact, lockdown happened. You were on your way to Switzerland. In fact, you were on your way to Andermatt. So maybe I just want to ask the question. You probably have an insight. What was the effect of COVID-19 in particular on Switzerland?
I think like all the other, like Europe got hit hard with Italy. I mean, Andermatt is about 2 hours from Zurich. It's very close to the Italian borders. So I was leaving with clients, and we do, for our clients, we actually take them over. They come and experience Andermatt Swiss Alps, and I was leaving with clients on the day. I had my kids packed bags, everything. I had a meeting in Stellenbosch, getting home at 12 o'clock, and I had to give them a call and say, unfortunately, we can't go because Europe was getting locked down. So they shut down Switzerland like they did Italy, Germany, and everything else. But they hit it hard, and they've recovered extremely fast. Schools are open, all the restaurants are open, the resorts are open, hotels are open. So they have got a very strong system, so that they've recovered really, really well. And I think what's going to be happening as well in Europe is a lot of people are going to be traveling inbound, and I think that's the same in South Africa. Instead of going abroad, they're going to be internal, traveling within the country. So with what's happened, the Swiss are traveling within, and Europeans going to be traveling within those units, and that's created other opportunities in the leisure industry. So they've bounced back. Yes, it is going to take a little bit of time, but yeah, they've bounced back.
Wonderful. That's great. Well, that's encouraging. So, Richard, I mean, we've got a few other guys that are, I mean, we've heard from Cyprus, they've got these residency and these citizenship options and that kind of stuff. So, and we're talking about Cyprus and obviously Portugal in particular with the golden visa and that kind of thing. So how does Mauritius compare with other residency and property investment jurisdictions?
So Mauritius is probably one of the longest running residency schemes. We launched the first development called Tamarina Golf Estate in about 2005, 2006. And that was the first opportunity for foreigners to buy property in Mauritius and get residency with that. The fact that it's a very simple program in terms of as long as you purchase the property for $500,000, it's just now dropped to $375,000. And we're waiting for that to be vetted through Parliament. But as long as you hold the property, you've got the residency. So you don't have to set one foot in the country. You can simply buy the property, acquire the residency, and use it if you want and come and live here whenever you need to. So it's been very well received from that perspective. And it's been, I think, the fact that it's so close to South Africa. A lot of our clients have business interests still in South Africa. And the rest of Africa, and the fact that they can utilize their asset for part of the year and spend part of the time back in South Africa, and also garner a yield out of it while they do so. That's proven to be quite an important part of clients investing in Mauritius.
Okay, great. Graham, now you're the money mover. You're the different guy over here. You're the guy that helps people take their money from South Africa or from an international jurisdiction and move it over. And particularly for property investors, which we are addressing today. So can you maybe talk a little bit about the exchange controls in terms of moving money offshore? How much can an investor move and that kind of thing? And maybe this is a really difficult question, and coupled with that is maybe to have a sort of a crystal ball on where you think the rand dollar scenario is going. So,
Sure.
Yeah.
Okay, thanks, Neil. Yeah, so yes, South Africa's got exchange control. So if we're talking about South African citizens looking to send funds abroad, we all sort of have to conform to the rules and regulations set out by the SARB, and we've got your 1 million discretionary allowance, and then a further 10 million, which forms part of your foreign investment allowance. So your discretionary allowance, you can send off up to R1 million with gifts, loans, travel allowance for investment purposes as well. And that's quite easy to just send through. You go to your bank, you send the funds through, you open an account with a company like Currencies Direct, you get a better rate than you would have got at your bank, and you send more foreign currency over. And yeah, it's kind of the reporting's a little bit easier on that side. When you start looking a little bit further, from the 1 million to 10 million, you require a tax clearance certificate from SARS. We go and obtain that for our clients, and basically just requires a little bit of due diligence, and we do all of that for you. So we make sure your tax affairs are up to order, up to scratch and in order. And then once that tax clearance is awarded to you, then you have the calendar year. So I'm talking from the 1st of January through to 31st of December, you've got that 11 million or 22 million per family unit. What is interesting to note, and I must mention, is that you're not limited to that. So I have clients that I send 100 million rand off every year for them. Obviously, it's a nice,
people would like to know how.
it's a nice position to be in if you've got 100 bar and you're sending it off into different investment vehicles. But the point is, you can do it. And our applications for more than 10 million. So you get your 1 million discretionary allowance, then you get your 10 million, which is your tax clearance, And then anything over and above that is called the sort of a letter of compliance, which is like an enhanced tax clearance. And it gets reported, and there's a couple of restrictions in terms of how you invest that money, but you know, due to the exchange control rules. But the point is you can do it. So we then go, and instead of giving an assets and liabilities for 3 years to get your a tax clearance certificate, you know, it's a little bit more in depth. You do 5 years, you have a look at your spouse, and all, you know, all cases are different, but we've got 100% success rate. So I've never ever had an application greater than 10 be declined. So the point is, while we have exchange control in South Africa, it's still possible to send your money out. So it's a bit of a loss here and there. Sometimes you've got to do a bit of paperwork, but that's what we, you know, we hope to help our clients with.
Okay. So look, I mean, the Rand's it's had a bumpy ride. I mean, it's, you know, and people always ask the question, when is the right time to move? Because, you know, if we had a crystal ball, we could say, yes, move out, move in, you know. What do you advise in that kind of scenario?
It's difficult. I mean, it is literally, we even ran you know, we send out a daily mailer every morning giving sort of 5 lines on what's happening in the market, just to, you know, so when you're having a braai with your mates, hopefully when lockdown's done, you can sound like you know what you're talking about. But the point is, it's just, it's kind of, it's difficult to tell. I mean, we lost 3% last week. We lost 1% yesterday. And that's all global fears, depending on what's going on. You know, people, you know, there's a fear that there's a second wave of COVID coming. So, you know, there was increased rates in China and US and that sort of thing. And then that affects us. You know, the global economy is sort of based on the dollar. So when a lot of things go down there, then, you know, we feel the ripple effects. So you look at the beginning of the year, we were down at, we were in 1390, you know, starting the year in January. And look at us now. You know, we went up to the stratosphere, and then we came back onto 16, and all of a sudden it's like 16 is now you know, the new 40 type thing. So we've lost a bit of ground, and we've had a couple of things that have affected us. Obviously COVID's been difficult, and then obviously the downgrade to junk status. So where it goes, the rand is one of the most volatile currencies. So the point is, if you've got money to move, I think it's not a case of wishing for 14 again. I think it's about understanding, listen, this is my investment. I want to go abroad. I've got a house. I know, you know, property. I've got this value that I can get there. Then it's about maximizing the exchange at the time. So while we can, you know, predict, and we can have a look at the economic forecasts, you know, we look at all of them. So we're multi-banked. We bank with Mercantile, with Bidvest and Investec. And we read all their morning forecasts before we give ours, but it's a guessing game. A lot of guys are saying the rand should strengthen towards the end of the year. Excuse me, we partner with Dr. Buerter as well, and he also says it should strengthen. So the rand's currently undervalued by about 20%, if that gives an indication.
Well, that's good for investors who want to move their money offshore. So yeah. Great. So Q&A time, guys. So we've got quite a few questions to run through here. And I'm going to start with you, John. There's actually a double-barreled question over here for you. Is there any property investment path that would lead to being able to live in Portugal that is not part of the Golden Visa program? This person says the program is not currently within my reach. And so I just wanted to say, maybe let's answer that one first, John. John?
Right. Got me there?
Right.
Okay, so there are different mechanisms outside of the Golden Visa. You can get temporary residency, you can get permanent residency without going for the Golden Visa. So there are permutations of where you can apply for those other forms other than getting the citizenship, etc. So those are all available, and okay.
Yeah, Karen, John?
Okay, so that's your first part of the question. The second part?
Okay, so the second part is, okay, so it's related to obviously property management. And do you offer a rental management in the Lisbon, your particular Lisbon development, and what kind of return on investment? So it's related to rental management offering, and secondly to ROI.
Okay, so a very good question. I think that what we do is under 650,000 euros downwards in a range of products, we offer a guarantee for 2 years, 4% per annum for 2 years. That is a guarantee that we as developers give to our purchasers.
And that's euros, eh? If we're talking euros, eh? 4%
euros.
in euros. Yeah.
Euros, yeah, in euros. When the development is, and in those units, they come with a furniture pack, so they're fully furnished. At the end of the project, we will run a return basis for our units from a hospitality perspective. And your returns, we are projecting that will run up to 6%, 7% per annum. I must just stress that Airbnb is, you have to get a license. Airbnb is very tightly controlled in Portugal, and specifically in Lisbon, you've got to get licenses. And we qualify for where we are for that license. So yes, we are looking after our investors. If they are investors, if they're owner occupiers, we offer all those different products that are available to them for them to max out. I just want to stress very importantly, the tourism, because everything's related to tourism. Once the product's complete and you're into giving investors returns, the tourism industry pre-COVID, Lisbon was steaming at a great pace of knots. And it's obviously now post will pick up, but very optimistic that it's going to get back to those levels very, very quickly. It's a very, very highly desirable destination for people to visit.
Excellent. Great. Thanks, John. Okay, so I've got a question here for all the panelists, and maybe Justin, you can have a go at this one. Can you reflect on the operation of the respective economies that you operate in? So we're talking for you, Justin, we're talking about the US. How soon are you anticipating the complete opening of the economy post? I mean, it's a very difficult question, post-COVID-19 lockdown. And what do you think of a combined intersectional companionship towards lifting the economies of different sectors? Quite a big question. It's quite a broad one, but essentially, what are you anticipating in terms of complete opening? It's probably saying how long is a piece of string. Do you want to have a go at that, Justin?
Let me have an initial bash at that. It is a complex question, but yeah. So I think we choose the US for a bunch of reasons. It is a very strong economy. It's extremely resilient, and one of the benefits that it has that we don't have in South Africa is that they're able to throw a huge amount of money at the problem, and certainly they've managed to. You want to call it flatten the curve of the impact of this disease on the economy. And I can say that there is absolutely no political will to tighten up and bring things back to a full lockdown again. They're going to let the disease run, in our view, certainly as a company. And so we don't think that there will be an impact going into the future. But obviously, we don't know what the disease is going to do. If it gets completely out of control, they'll have to do something. So, we're relatively confident that the US economy has got to the end of it. There's been also the additional issue of the riots, and I think that's also sort of under control. Initially, there was a real cause, and then thereafter, it was hooliganism that was driven by people, to be quite honest, that had probably been locked in for a bit too long, and that's the story. But mostly under control across the states, and certainly in the states that we're in, specifically Texas and Georgia. It's really pretty much back to business as usual. So I think that's my best take on the US. Huge amount of they can handle it, and they can throw resources at it to make sure that they stop they flatten that curve.
Great. Any one of the other panelists would like to maybe elaborate or add in terms of your destination?
Yeah. I can jump in there very quickly, Neil, regarding the UK market. The UK as a market fundamentally has been strong for some time. So look at simple economics, supply and demand. they're not building enough property. They need about 300,000 new units built on an annual basis for the next 5 years. They need a lot of property. So that is huge. Affordability is strong. Unemployment is low. Money is cheap, and it is possible to get lending in the UK for South Africans with the right brokers and the right people working on your team, which is part of the offering that we put together. But the interesting thing, I think Brexit has obviously given us sort of a 3-year lead in of uncertainty. COVID has effectively multiplied that a little bit more, if you like. And one thing Warren Buffett says, which always rings true in my ears, is be fearful when others are greedy and greedy when others are fearful. And there's a lot of fear out there in the market, a lot of opportunities as a result. Now, interestingly enough, the UK, the England property market, if you like, opened up about 3 weeks ago. Rightmove, the property portal there, had its highest number of hits on a daily basis, or on one day in history, 5 million unique users to Rightmove. In terms of our rents, they had the highest, at the moment, the UK has got the highest figure of annualized recorded rents in the UK as it stands. So I don't know what's happened during COVID. Maybe people have spent too much time together, decided they want to get divorced, decided they need to upgrade or downgrade their houses. But there certainly is a lot of people out there and a lot of opportunity out there. So, looking at interest-free loans to do properties up. The government is really putting a lot of resources, a lot of money into the economy. After rereading yesterday, another 100 billion chucked into the economy. There's business bounce back loans that have been put in place. There's been a lot of measures, the furloughing scheme. There's a lot of money in the economy at the moment, which, if you look at what Brexit has created over the last 3 years, for me spells a great buying opportunity within the next 12 to 24 months.
Okay, excellent. Sean, there's another question here. Do you need to have another passport to invest in the UK? I mean, what if you have a South African passport? Is it harder to invest in property in the UK as a result?
Oh, great question. Not at all. It's all about what you invest through, within the UK market. So the passport you hold is completely irrelevant. What we generally advise our clients to do is set up an entity that lives and breathes within the UK. And as such, initially lending will be a bit, it's gettable 100%, but the rates, the loan to value is slightly lower. The interest rates might be slightly higher, but as that entity submits annual financial statements on an annual basis, develops a credit history, you can attract the right type of lending or similar lending to what residents would attract. So even if you have a South African passport, absolutely no problem. It's just about the entity that you set up within the UK to invest through, and then the team that's in place to get the lending, to find the property deals, and so on and so forth. And one thing COVID has done is been able to get our clients buyer ready all the way here from South Africa. So, in terms of identity checks through solicitors and all that type of stuff, we've been able to get them in a position where they can actually start purchasing property without even having to go to the UK. So that's been a big positive, certainly through the solicitors and they're wanting, the right type of identification. That's all gone online now, which has given us even more of an opportunity to buy.
Wonderful. So a question for Pascal, and I'm also going to put over to Tony as well. What is the minimum entry amount for investments in Cyprus and Switzerland?
Okay, am I going to take this one first?
Yeah. Go for it,
cool.
Pascal.
So in order to get yourself a permanent residency there, you're looking at approximately 300,000 euros. That is the price point that you're able to apply for this permanent residency or the golden visa. And obviously the turnaround time in that golden visa is quite short. You're looking at around 10 odd weeks to be able to complete it. And very similar to what John said, I mean, you don't have to visit Cyprus to be able to get it until such time as you need to do your biometrics, and then you would come through to Cyprus. But just to confirm, it's a 300,000 euro investment.
Tony?
So in under my Swiss Alps, we're launching new studios and one bedrooms now within the next week. You're looking at around 350,000 Swiss francs. That's your entry level. Guys offer full turnkey relationship where they manage the property for you, the whole of Undermud Swiss Alps. There's no Airbnb or anything. They manage the property for you, depending if you're wanting to come in summer or winter, and obviously the use that you're wanting to use. You're looking on average between 350 and 500,000 Swiss francs.
And John, for Portugal, is that pretty much, John, are you there? John, I think, do you just want to talk about the minimum average amount that you can invest in abroad in Portugal?
Okay, so the golden, thanks, Neil. The golden visa is restricted to 500,000 euros for new builds. In other words, there is a 350,000 rand entry level, but that's a conversion. But for what we do, which is a new build, 500,000 euros is the golden visa entry point. But I must stress, in Alex Living, we have a whole range of different buyers. So we have not only the golden visas, we have investors looking for the guaranteed return, which we give. And then we have the traditional Portuguese market wanting the bigger units because of where we are. We're close to the schools and the shopping centers, and we're in a very vibrant mixed-use area. But the golden visa is 500,000 euros.
Great stuff. Thanks, John. Okay, question for Richard. Richard, is there a limit on the number of years residency scheme? And what happens to residency status when you sell your property?
Sorry, Neil, just say that first part again.
Okay, is there a limit on the number of years on the residency scheme? And what happens to residency status when you sell the property?
Okay, so as long as you own the property that you've purchased, you have the permanent residency status. So as long as you keep that property, you've got the indefinitely. You don't have to reapply for anything. So that's what makes it very easy in terms of sort of the whole process.
Okay, great. Okay, there's quite a few questions here related to markets which none of you are specialists in. One of them is Mozambique and the other one is Dubai. Now, I mean, I've got an opinion of Mozambique. I mean, I don't think you own the land, but, and I've been to, the fortunate thing, I've been to all the different countries, and I think it's understanding, and I'm going to put it through to everybody on the panel. When you're going offshore, I mean, the importance of understanding the local rules, regulations, surely must be on the investors' radar screen. They've got to understand those markets. Anybody for comments on that? Maybe John, you want to go, and then I'll go around to the rest of the panels.
Okay, so for us, it's crucial. So what also impressed us about Portugal is the sophistication of the golden visa program. Very highly sophisticated, and not difficult to understand. So for us, if I'm investing abroad or my clients are investing abroad and they want the golden visa, we must be absolutely open. We offer not only the golden visa services, we look after the fund, also the accounting and the financial, because it's all locked into the whole package. Then where's the property? What's the price entry levels, etc. So we offer, together with our service providers, which will be the banks, etc., a complete package. But certainly on the visa situation, that's a very specialist niche market. You need proper people that know what they're doing.
Okay, wonderful. Thanks, John. Okay, so we've reached, can you believe it? It's already 1 o'clock. It's an hour's gone by in this session. So what I'm going to suggest to you, but before we do, there's one or other question here for Justin. I'm going to get back to you as well, Graham, just in the wrap up. That there's a specific question for you, Justin. Let's look at the investment. Now you have buildings which you call medical 1 to 26, and there's a question particularly pertaining to medical 26. Do you have to invest for 5 years? And if I invest 100,000, what kind of return? Because it's pure returns, right?
Yes, I think first of all, our minimum investment is 5,000. I think that was asked earlier on the webinar. The idea is that we let you do it very easily. So if you were to invest 100,000 in medical 26, the benefit of medical 26 is you already bought the building, and so it is already closed. You get returns almost immediately. So you would get on your 100,000, you would get the return in year one is slightly lower, and that is about just under 6%. So you get 6% in your first year, and you start earning almost immediately. So I think that might answer the question about 26.
Okay, great. Wonderful. Okay, so gentlemen, I'm going to ask you all to wrap up because we have come to the end. If you can give us a way forward in terms of your particular investment destination. I think first of all, to give people some kind of feel about why they should be investing offshore, why they should be investing in your particular destination going forward, especially in the current market. And then just some final comments, just a wrap up and some of your thoughts. And I'm gonna ask you, Graham, to wrap up, to start that wrap up on your side, and then I'll move to you, John, thereafter.
Sure, thanks, Neil. Thanks for having me again. Yeah, I think it's hugely important. I mean, in our client book, obviously it's varied, various investment schemes and way people send funds off or bring them in. But in the property sector, we see large amounts of funds going out for the purpose of exactly what we're talking about. It's important to diversify. It's important to have trusted source, to have the guys there that you help. And then, inquire, use an outsourced company like Currencies Direct and get more value for your rand, help, in sending the funds abroad. Cut through that red tape and just make it easy. So when you know where you want to go, give us a shout.
Wonderful. Thank you, Graham. Thank you for being on today's webinar. Really great. John, your closing comments, please, and your closing thoughts.
Yes, definitely from an investment perspective, one has to have an offshore exposure. I mean, that's just good common sense investing. So property, and while we chose firstly Portugal, stability, it's in the middle of Europe, it's very affordable relative to its sisters and brothers around it. And we also saw the upside in the potential of the capital appreciation, this high supply demand issues. So giving our clients and our investors the very, very best with all the experience that we've got behind us in South Africa of delivering billions of rands worth of developments. And we are very committed to extending and continuing to develop offshore.
Wonderful. Thank you, John. It's wonderful that you're going to leave an indelible mark in Lisbon, in Portugal, as you've left on Cape Town as well. But thank you for being part of the panel. Wonderful having you today.
Thank you.
Justin, your closing comments, please.
Yeah, I'm going to close pretty much where I started off. Guys, we don't offer anything exotic. We don't offer exotic returns. We don't offer exotic destinations. We are only focused on one thing, and that is first, capital preservation with a good return. And our returns at 8% with an IRR of between 11 and 17%, paid out in cash, US dollars, is all we offer. And we offer security, and we offer capital preservation firstly. And that is really what we're on about. You can invest alongside of us for as little as $5,000 on your first investment. Obviously, $5,000 is a start, and we hope that you will build up over time so you can continue to add to that investment from as little as $1 on every project that we launch. So that's all from me.
Wonderful. It seems very accessible to many South Africans. Thank you very much, Justin, for being part of the panel. And Sean, your closing comments, please.
Neil, thank you very much. And to the other panelists, thank you very much. It's been a really informative session. From my side, I think we've got a great opportunity to buy property in the UK, a buying opportunity within the next 12 to 24 months. And I think with the right education, and we are all about education first and giving investors the tools to get started. And then the teams in the UK to go and find you property deals where you can recycle your money. So, you can buy something, add value, refinance it, get some of your cash back to build a property portfolio long term is really what we're all about. So I think the opportunity is there. You can get started in the UK. We've got teams sourcing properties, in the valleys of Wales for, if it was as little as 500,000 Rand, you can own your own property in the UK, no problem. and you can get that money working for you. So that money doesn't just buy you one property, can buy you more than one property. So the UK has a great opportunity. Supply and demand is there. Affordability is strong. Money is cheap, so cash flow is great. And we can get those properties, putting money into your pocket from day one. Neil, I've just in the chat box for all the guys have included a free guide there on UK property investing for them. So, you know, have a quick read a bit more if I haven't articulated well enough, you know, what opportunity the UK presents.
Wonderful. Thank you, Sean. Thank you very much. Pascal, I'm going to ask you to give your closing comments there.
Neil, thank you. And thank you for putting all of this together. I think it's been a great day and good chat with having everyone here. I think from investment into Cyprus, definitely it assists to create that plan B or that exposure into another market. You are buying a top-class product, which is at as low as 300,000 euros, and it's got fully furnished and looking onto the beautiful Mediterranean Sea. I think it does come down to lifestyle as well as good property fundamentals. And this product in Cyprus, through very reputable companies such as Quarantina Homes and KPMG, it's actually a very strong product for South Africans to look at. Thanks.
Wonderful. Thank you very much, Pascal. Richard, your closing comments, please.
Thanks, Neil. So, I mean, from a country perspective, Mauritius stacks up, you know, a number of fronts in terms of sort of the stability, the economic governance, ease of doing business. So over and above the investment property and the residency, there's a number of reasons why people are choosing Mauritius as a destination. I think it's important to note that as much as residency is important, the asset underpinning that residency is critical. So obviously our job, you know, as Plan Building International, to make sure that investment stacks up and that it actually adds value behind your residency and your longer term investment. And then just quickly some news on the changes in Mauritius. So the budget on the 4th of June sort of announced that the buy-in for residency drops to $375,000. They've also announced a number of initiatives that will allow people with residency status to convert to the country and to integrate a lot easier. So the ability to sort of live here, settle here, start a new business, and also have your spouse work has become a lot easier.
Great, and it seems you're just a hop, skip, and a jump away from Justin, who's sitting in Durban. So, okay, Tony, you've got the last word. So, thanks, your closing comments, please.
I think, Neil, you know what's really, really cool is that not one person on the panel offering opportunities all over the world has discourage people in South Africa. And I think that for me is crucial. I think that as South Africans, we still live one of the best lifestyles in the world. That's number one. So what we help with our clients is go, listen, you can live in Cape Town, you can live in South Africa, but you've got to diversify. You can't have all your eggs in one basket. And that's all that we're helping our clients go and say, listen, diversify, still live in Cape Town, still amazing opportunities in South Africa. But at the same token, be wise and open your global, become a global citizen and diversify and create global currency while living in South Africa and then enjoying the lifestyle and living life now. So I think that those are the points that I think the panelists hit on the head on every element and the opportunity for South Africa to invest. And it comes key to having the right people on the ground, the right team to hold your hand. How do you do it? And it's not just selling another asset. It's about how do we help our clients get to their end goal and have investment for their legacy of their family and having a good lifestyle. And that's what Undermat Swiss Helps does to put that little nugget in.
Touche. I don't think you could have ended off on a better note there, Tony. First of all, I want to thank each and every one of our panelists. Thank you very much for all your contribution today. It's been a very insightful chat. And I know it's very difficult to get through all the questions in the amount of time that we've had. But I'd like to thank John Robbie, co-founder of Robbie Property Group, founder of Signature, and now the chairman and founder of New World in Portugal. Justin Clark, the CEO of Orbvest, United States. Sean Thompson, founder of WealthTrek, United Kingdom. Richard Hallett, director of Pan Golding Mauritius. Pascal of Quarantina Home Cyprus, Tony Enderley, Andermatt, Switzerland, and Graham Barrett, the CEO of Currency Direct. Thank you all, gentlemen. It's been wonderful having you all. And I want to thank you, the audience, for your attendance and your patience today. We went over time, but I think it was necessary. This is going to be posted on our website for those that didn't get the opportunity to see that. Please, I encourage you to engage with our panel. They want to engage with you. I think there's very strong argument for investing offshore and still living the South African lifestyle, as Tony so eloquently explained. So we will see you next week, Friday at 12 o'clock for our next weekly webinar. And for those of you that did come late or had to log out early or missed this webinar, can still view the webinar replay, which will be posted onto the REI Mag platform. Just go to the show's drop-down link where you'll find REI Talk. Next Friday's webinar topic is very different. It's the best education options to make money in real estate. Meet the property coaches and educators of real estate. So we'll be debating all those options in property education. So to register for next week's webinar, you can click on the link below in the chat box, or you can go to the REI Mag website and register on the front page, or click on the link below. There is an important announcement. We are hosting, and don't forget, it's on the 13th of August, and it's our half-day virtual property masterclass for first-time buyers and investors, and it's going to take place on Thursday, the 13th of August from 9 o'clock to 1 o'clock, and we are hosting this virtual masterclass in conjunction with Let's Talk Property, our webinar and virtual conference partners. We have over 60 expert speakers, 16 hours of property investment, content and education, a free digital property investment guide, plus an opportunity to become a member of the Property Wealth Network. Incredible benefits for the buyer and investor. This is also a free webinar, so please sign up quickly. The link will be posted on the page as well, and we're limiting it up to 10,000. I know we have a lot of bookings already, over 2,000 people. So you just click on the link in the chat box below and don't miss this, which could be a life-changing educational webinar. And we hope to do exactly the same in offshore in the future, and hope to have a lot of our participants and panelists that we had today to be involved. And I'm sure they would love to be involved in something like that. So I'd like to end with a bit of an inspirational quote from Andrew Carnegie, who was an American billionaire industrialist. And he said, 90% of all millionaires become so through owning real estate. More money has been made in real estate than in all industrial investments combined. The wise young man or wage earner of today invests his money in real estate. And on that note, this is Neil Peterson of REI Mag signing out of this week's REI Talk. And until next week, Friday at the same time, stay safe,